crypto market has been going crazy with news about Bitcoin and crypto ETFs lately because the SEC has officially accepted BlackRock's spot Bitcoin ETF application on June 15th. In reaction, other firms also filed for applications for similar ETFs, creating a surge in attention around crypto ETFs. And in today's video, let's talk about what crypto ETFs are and why they are such a big deal. Let's dive right in. So what are crypto ETFs? So an ETF is an exchange-traded fund, and it is a fund that tracks underlying assets like stocks, bonds, or commodities. And a crypto ETF follows the performance of a certain crypto or crypto-related assets. And there are two main types of ETFs that should be considered. The first one is spot ETF, and the second is futures ETF. So spot crypto ETF are backed by physical crypto and are designed to track the price of the underlying cryptocurrencies, such as Bitcoin, by holding the actual crypto in custody. And spot ETFs aim to provide investors with direct ownership of the crypto and allowing them to participate in the crypto's price movements without needing to buy and store the cryptocurrency themselves. While futures crypto ETFs track crypto futures, not the actual crypto. So instead of holding the actual crypto, these ETFs hold futures contracts that derive their value from the price of the crypto. And the ProShares Bitcoin Strategy ETF was the first to be approved by the SEC in 2021. And this approval actually contributed to the surge in Bitcoin's price to an all-time high of $69K in November 2021. So the SEC has always been very reluctant to approve spot Bitcoin ETFs, and they have rejected numerous proposals. However, this time, the world's largest asset manager, BlackRock, submitted an application for a spot Bitcoin ETF, which is basically very hard for the SEC to reject. Firstly, given their impressive ETF approval history, and secondly, because BlackRock revised their application to the SEC, and their application now includes a surveillance sharing agreement with Coinbase. And what this agreement is basically an agreement that Coinbase can share surveillance data with BlackRock, and by sharing this data, they can work together to monitor and detect any suspicious or fraudulent activities in the Bitcoin market. And the reason why this agreement makes BlackRock's application difficult to reject is because this demonstrates BlackRock's commitment to maintaining a fair and transparent market. And shortly after the news that BlackRock submitted their applications, 8 other firms, including Fidelity, Invesco, and WisdomTree, followed. And the reason why other firms quickly raced to submit their applications is because they know that once these applications are approved, a huge flow of institutional money will flow into Bitcoin, and by having the first approval will allow them to capture the most of the market share. ARK Invest CEO Cathie Wood and Galaxy Digital CEO Mike Novogratz are both very optimistic that the SEC will approve of the ETF applications soon. Cathie Wood thinks that if the SEC is going to approve a Bitcoin ETF, they will approve more than one at once, while Mike Novogratz says that it's not a question of if, but when one of these applications will receive SEC approval. The approval of a spot Bitcoin ETF would bridge the traditional finance industry and the crypto industry, and this would increase the exposure of Bitcoin to the institutional market because investors will not have to hold the actual asset, which provides a barrier-free entry. And it also appeals to traditional investors because of 2 reasons. 1, it allows trading similar to stocks, which potentially means driving Bitcoin's price as institutional capital flows into Bitcoin. And 2, ETFs are managed by trusted firms like BlackRock, which provides investors a regulated way into the market. And this would also mean a significant step towards mass adoption and recognition of Bitcoin as a legitimate asset class. Although some concerns include privacy issues involving Coinbase's agreement and the possible centralization of power. Still, spot Bitcoin ETF issuers would merely custody Bitcoin for clients, not own it, though more individuals handing over custody does worry some. Because as the saying goes, not your keys, not your crypto. And there's also annual management fees, which can make crypto ETFs costly in the long run. Another main concern would be market manipulation. As the ETF would likely hold a significant amount of Bitcoin, there could be a higher level of trading activity and speculation, which could result in price fluctuations and increased market volatility. So the decision deadline is as early as August 27th, but it is important to note that the SEC has up to 240 days, which is until March 2024, to make the decision for final approval or denial. And everyone is keeping a close eye on the SEC's movement because their decision will have a significant impact of the future of Bitcoin and the broader crypto industry. So that's it for today's video. Thank you for watching. I would also like to thank our sponsor for today's video, Bybit. If you haven't signed up for Bybit, sign up with our link down below and you can get up to 30,000 in rewards. Let us know in the comment section down below what you guys think. Will the SEC approve of the applications? If so, why or why not? And don't forget to like and share this video if you find it helpful, and subscribe to the channel if you haven't already. And until next time, bye!